Let's have a look at the types of questions you might get in an external exam. Let's look at some examples and see how we would answer them. Here's a question: justify why the financial statements of XYZ Limited are required to comply with New Zealand GAAP, and include in your answers an explanation of what New Zealand GAAP means. Now, in an exam you would normally have some sort of extract or something that you would look at. Here we're going to have a look at a small extract. It says XYZ Limited financial statements comply with New Zealand equivalents to International Financial Reporting Standards, NZIFRS, and other applicable financial reporting standards as appropriate for profit-oriented entities. The financial statements comply with the International Reporting Standards, IFRS. This is in fact what the framework is based on, the International Financial Reporting Standards framework. So those are the sorts of things that you could get in an exam question. So how do we tackle answering it? We start by looking at what GAAP means and its implications. GAAP is the basis upon which financial reports are prepared. Now, the first indication that GAAP applies is, in this case, is that XYZ Limited follows the International Reporting Standards, or the New Zealand equivalents, which encompass specific rules and procedures for the preparation of financial statements. The second indicator of GAAP is that the IFRSs are followed and other reporting standards as appropriate. So there's two separate indications here that they're following GAAP. By XYZ complying with GAAP, it ensures that the financial statements give a true and fair view of its financial performance, and that word true and fair view is probably the key part of that question. And it gives a true and fair view of its financial performance, statement of financial position, and cash flow. And the financial statements are required to comply with GAAP because it's a reporting entity with public accountability. Now, it'll always be a reporting entity with public accountability in this exam. So even though I've not specifically stated it, you can tell for this, which means that shareholders, banks, everyone can rely on these statements, for example, to whether they should buy or hold and sell shares, things like that. Now, the auditors in the same statements have said that XYZ may experience some difficulty meeting loan obligations due to excessive debt. This may cast doubt on their ability to continue as a going concern. So justify what going concern means and how that applies to the management of XYZ, and include in your answer an explanation of the link between the extract above and XYZ's ability to carry on as a going concern. So let's start. And one of the things that going concern means is that the statements are prepared on the basis that the business will continue on forever, and the auditor report gives an independent opinion about whether the business can continue into the foreseeable future or not. So that's the first thing. It's probably a good idea to actually say what the going concern concept means. And in this case, the going concern concept implies that XYZ Limited's management do not intend to liquidate or cease trading, and the management auditors have not identified circumstances that might force them to cease trading. Now, that might sound a bit of a tautology, but what that means is that the management is saying it's a going concern. Okay, and if they say it's a going concern, it also means that the auditors are saying that it's a going concern as well. However, according to the extract, this is not true. The auditors have stated that excessive debt may cast significant doubt upon XYZ's ability to continue as a going concern. So that doubt is there, Part of the reason that that's important is because asset values are based on the assumption that it's a going concern. Now, if they cannot meet their obligations to repay debt to the bank or arrange further finance, the auditors do not believe that XYZ can continue to operate as a going concern. So that's a signal or a warning to people that that assumption is not a strong assumption anymore. Now, another implication of the going concern concept for XYZ management is that they can state asset values at historical cost and that they're not required to show them at market value. In the event that XYZ ceases to be a going concern, asset values must be recorded at market value, and market values are likely to be much lower in an urgent sale situation. This means that the general purpose financial statements of XYZ Limited might not currently provide a true and fair view. XYZ's inventory will be recorded at the lower of cost or net realizable value and has been written down by $2 million due to its aging nature. Justify why the inventory for XYZ Limited has been written down to net realizable value and how that illustrates the qualitative characteristic of relevance. So let's have a look here. You can start this by actually giving a definition of relevance if you wish. So that's one way to start it. This particular answer hasn't. XYZ Limited's electronic stock must be reported at the lower of cost or net realizable value, as this is the probable future economic benefit to flow to XYZ Limited when this type of inventory is sold to customers. So that's part of the definition of assets, probable future benefit to flow. In the case of the extract, XYZ has written the electronics down by $2 million as the net realizable value is lower than the cost due to the electronics becoming aged and or out of date. So here's where the relevance bit comes into the answer. And we could have done this at the beginning. Relevant information is information that can make a difference to the decision of users. Net realizable value is more relevant because it is capable of making a difference in the decisions of users by having a better predictive value of the future economic benefit of the electronics sold. Managers can then decide what the selling price might be for that stock. Right. Here's another one, and this one you're not seeing a statement of cash flows, but in an exam you probably would, and you would need to mention the statement of cash flows. Justify why the creditors of XYZ would be interested in the statement of cash flows. Include in your answer the purpose of the statement of cash flows. And so the purpose of the statement of cash flows is to provide information about historical changes in cash of XYZ Limited, and it shows where XYZ Limited's cash has come from and what the cash has been spent on during the year. The creditors of XYZ would be interested in the statement of cash flows as they want to know if XYZ can meet the current repayment obligation to them, and also if they should extend further credit to XYZ. So just remember, in an exam, refer to the specific cash flow statement, put some numbers in, and relate it to the creditors and users indicated.